Hey, it's Mark Ferguson with Invest for More, and welcome to another one of our real estate investing videos. This one is more tax related, current events related than real estate. I'm sure a lot of you have seen the news that came out that Biden wants to increase the capital gains rates significantly. Now, I am not an economist, I'm not a politician, I am a real estate investor. So I'm not going to be going into incredible detail on how this will affect the economy and the world in general, but I will give you my opinion on how it might affect real estate and some basic stuff on how it might affect the economy too, from my point of view. And I think it's important to know that even the world's most dedicated, amazing, best economists don't know what's going to happen. There's so many working parts and so many different things going into the world and United States economy. It's really impossible to know how something like this could affect it, impact it, but I guess we'll see. It's also important to know that this is not law yet. It hasn't been implemented yet. They're proposals that could happen. So I don't think everyone should be panicking and freaking out, but it's good to know what might happen and how that might change things, especially with real estate. Now, of course, check out investformore.com for much more information on our flips, rentals, being an agent, all that great stuff as well. And let's get going on what is happening with this news. All right, Biden capital gains tax increase proposal. He said today, or people in his camp said, he wants to raise taxes. Right now, capital gains rates are 15 to 20%. And I guess first off, what is a capital gain tax rate? So, long-term capital gains is what we're talking about. Long-term usually means more than a year. You invest in something, you hold it a year, you sell it after that year. That's very basic. Of course, check with an accountant for specific tax rules and questions and all of that. So if I have a rental property, I buy it, I hold it for a year, hopefully it's rented during that time, I sell it after the year, you're usually paying long-term capital gains rates. Now, if I'm flipping a house, I buy a house, I flip it, we sell it in 6 months, you're usually paying short-term capital gains rate. A short-term cap gains rate is basically whatever your ordinary income tax rate is. So if you pay 30%, 35%, whatever it is on your normal income that you earn, if you buy a property, sell it in less than a year, that's what you're paying, is that ordinary income. There's no special rate for short-term cap gains. It's whatever your earned income is. Now, you can put those properties in a corporation, which is what we do. We have an S Corp for our flips. Those pay the corporate tax rate, which is usually less than the ordinary income. There's also some deductions for corporate tax rates. Biden also wants to increase corporate tax rates, so that could also impact people in the real estate industry. Again, we don't know how or by how much all this will change, or if it will change. It probably will, but all of those details have to get worked out. Trump had a ton of tax breaks and different things and changes he wanted to make and proposed, and some got implemented, some did not. There's a huge amount of changes before everything was put into place. So just because he wants to do these things doesn't mean it will happen, but it could. So what does his increase want to do? Well, first, the 15% now is basically for people who make less than 400. The numbers are different if you're married, filing separately, jointly, individually, but basically if you make 440 to 490,000 or less, you pay 15%. If you make more than that, 450 to 490, you're going to pay 20% now on long-term capital gains. And so you pay that tax on the profit, right? The profit you make on the property. If you buy it for 100,000, sell it for 200,000, but then you have 25,000 in costs along the way, your profit would be 75,000, not just the purchase minus the sell price, or the sell minus the purchase. So that's important to know as well. Now, Biden has said he doesn't want to change cap gains rate for people making less than 400,000. So that's why I said this increase from 15% to 43%. But he wants to bump it a bunch for people who are making more money. So if you're making a really high income earner, you could pay as high as 43% cap gains taxes. So that's a big jump, right? That's more than double what it is now. That's not just a little bit, that's a really big jump, and that could greatly impact our economy, real estate, all kinds of different things. And also, we don't know for sure they'll be implemented, and we don't know for sure. It won't affect people under making less than 400,000, but that's what's been said so far. Now, the really interesting thing, if you live in California, New York, other really high income tax states, you're paying more than 50% taxes on cap gains now because you've got this 43% plus the state taxes. So I think, what was it, in California, it would be 57% or something taxes on cap gains for high income earners. So how will that affect things? Obviously, right? That's a huge, huge, huge difference. Now, they're still paying, right, state taxes on the 15 or 20%, but still, like 23% difference. That's a lot of money people might be paying in taxes now that they weren't paying before. Now, one thing I will say about the national economy, and something I've read, is that this could really affect venture capital starting new businesses, Silicon Valley. So real quick, we'll talk about that. Let's say you start a new business, and this isn't just a small mom and pop shop, but you're trying to start a $100 million business, a high tech business. Maybe it's $1 billion business at some point. Well, you need money to start, and so usually venture capitalists, other investors will give you money. They might give you $10 million to start your company. And if things go well in 5 or 10 years, maybe that $10 million investment turns into $50 million. I know we're talking big numbers. This could be 50,000. This could be 100,000. It could be a million. It could be 100 million. But because this happened over 5 years, their investment into your company is considered a long-term capital gain rate, and on this $40 million profit, they'd pay their 20% plus state income taxes. Maybe they're paying 30% income, right? Or 30% taxes on that 50 million. Well, now, instead of paying $15 million in taxes here, hopefully this all makes sense, well, they could be paying $30 million in taxes on that. So the idea, and what some people have said, is that the risk reward here, where you're losing more than 50% of your profit to taxes, could eliminate a lot of investors wanting to invest in United States venture capital, in new businesses, and this could greatly decrease the amount of new businesses, the new startups happening in California. This could cause people to not only just leave California to other states, but maybe they're going to other countries now where taxes are much lower, and they know if they start a new company, it's successful, they're not paying $30 million in taxes anymore. They're paying 10, 20, whatever it is. So the idea that this huge capital gains tax increase could really hurt jobs, advancement, innovation, because people won't start companies here anymore. Those companies won't hire people anymore, and they'll be going to other places with much lower taxes, which, again, not an expert on this, but I could definitely see that's a valid point and a very valid concern for people starting new business. Oh, one last thing. I saw one tweet too from a company owner who said, hey, when I started my company, my big concern wasn't how much in capital gains taxes I would pay. My concern was starting a business and helping the world. And that's true. Most business owners, that's why they start companies. But if you want financing, the people giving you money are worried about cap gains rates and taxes. They'll be very concerned about it. So how could this affect real estate? Well, it could obviously have a huge impact on real estate. If you hold the property for 5 or 10 years and you make a whole lot of money, which has happened lately with prices going up, you may be looking at doubling how much in taxes you're going to pay. So if you're making $1 million on a property, instead of paying $250,000 or $200,000 in taxes, now you're paying $500,000 or $600,000 in taxes, right? That's a huge, huge difference. And then we're not even getting into the really complicated stuff about the fact that, well, you used income that you already paid taxes on to buy those properties, and that with inflation increasing over time, if you hold a property for a very long time and you're paying 57% taxes, and there's inflation this whole time, are you really even making any money? Or, I mean, there's a lot of things that go into, but what could that do? Well, we could see a huge increase in 1031 exchanges if this happens, because with a 1031 exchange, you can sell a property, buy another property, and defer those tax gains to later down the road. There's lots of restrictions. I have a video on 1031 exchanges. I've done a few myself, so I'll link to those below. Of course, Biden said he wanted to get rid of those. So will these stick around? We don't know. If they stick around, I'm sure there'll be a massive amount of 1031 exchanges used from now on. Opportunity zones, that's where you buy property in certain economically distressed areas as described by the US government, put a bunch of money into them, start a fund, hold them for 10 years. They can have some pretty amazing tax advantages too. I have another video on that I will link to as well that talks about opportunity zones and how those work. The big one, if everybody knows capital gains rates are going up significantly, and this isn't going to happen like tomorrow or a month later, we'll have some time to consider, hey, 8 months from now, a year from now, tax rates are doubling. I'm going to sell now. I'm going to take my profit at the lower tax rate and let someone else deal with the higher tax rate later on. So we could see a lot of big money real estate investors selling properties off. Selling big properties, properties they have a lot of profit on. And what will that do to the market? It's really, really hard to know. Could it cause a downturn? I think for sure it could. I don't think it's going to cause a crash. We've talked about that before. I have lots of videos on crashes as well. And for the vast majority of real estate is driven by owner-occupant buyers, people who live in homes. They won't care about this because they have a tax-free gain when they sell a house. So if you live in a house for 2 out of 5 years, you don't have any capital gains. You pay up to $500,000 for a couple, $250,000 for an individual. So that's amazing for owner-occupants. They won't be as concerned. But investors will be very, very concerned. So will these hedge funds that have, I think hedge funds own about 3% of housing right now in the United States, who are investors and made huge gains, will they be selling a bunch of their properties now? Will commercial investors who've made a bunch of money be selling off their properties now? Will multifamily property owners be selling off a bunch of their properties now? It's possible. I don't think it will cause a crash. I don't think it will destroy the entire market, but it's definitely possible. We could see a big slowdown, a big decrease in demand for new properties, especially commercial properties, investment properties, because all of a sudden they aren't nearly as attractive as investments if you're paying these huge gains on the profit. Is the risk worth the reward? I'm a real estate investor, house flipper, landlord. I've done very well with real estate, but I'm not going to sit here and tell you there's no risk or that bad things can't happen. One of the reasons we're willing to take these risks and spend a lot of money and make repairs and renovate houses and improve neighborhoods is because there's big rewards in real estate and we can make a lot of money. Well, if you take away those rewards, are people going to stop investing in communities, in rehabs, in long-term projects because they know that money is no longer going to be as much as it was before? These are a lot of things to think about and can bring up a lot of different issues. So what might happen if these go into effect, if this becomes law as it is now? I could definitely see a sell-off of certain properties, people taking those gains, taking those profits now when they're lower, and not wanting to take profits later on when taxes are much higher. So we could see more properties coming on the market, and then will there be buyers for them? Maybe. We'll have to see about all of that. I guess it depends on how good of a deal they are. Fewer jobs, is that possible? I think it's definitely possible if people are willing to take more risk now because the reward's higher, but if the reward is decreased, people might not be willing to take those big risks anymore. They might not be willing to invest as much money in new companies or real estate or development or building properties, right? What we need right now to fix the housing market shortage is more properties, is more development, is more building. And will these cap gains make that even harder to do? Because right now, very few developments are happening. Very little building is happening. And I don't know how much tax rates, cap gains tax rates apply to maybe new construction. in individual houses, but it definitely applies to development and buying big lots and developing and selling them over time. That definitely plays into effect there. So that could be an issue there. And I don't think that's something we want, is fewer jobs. Less investment, we just talked about that. If people don't have that reward, they might not be investing, or at least not here. They might take their money and invest it somewhere else, right? A really easy example is I live in Greeley, Colorado. There's a town called Garden City right next to us. Garden City became a town because Greeley was dry. They didn't sell liquor for many, many years. Garden City did. So people in Greeley who wanted to buy liquor went to Garden City and bought liquor. It didn't stop anybody from buying liquor. It didn't stop them from drinking. It just took all the money from Greeley and moved it to somewhere else. So we're not stopping investment completely. We're not stopping development completely. We're probably just taking it from the US and moving it somewhere else, which I don't really think is a good thing either. What is the pro? I guess we're getting more revenue for the government, right? You're getting more money into the government, and we're deciding, hey, we trust the government to spend money more wisely than these companies taking all the risk, doing all the investment, creating jobs, reinvesting into the community. So that's up to you to decide how big a government you want versus how small a government you want. Do you trust the government to spend your money wisely and spend money on the right things and use it efficiently? I know what my opinion is, but I'll let you come up with your own opinion. So in conclusion, I understand the government needs more money because they've been spending it like crazy. I don't know if doubling a tax rate that is directly related to massive investment and job creation in the United States is a good idea. But I guess we'll see how it plays out. Again, this hasn't become law yet. It's not official. We'll see if things get changed, rearranged. They usually do. And from now, I mean, do I need to sell a bunch of my properties? I don't know. Because think about it. Even if you don't make $400,000, if you're selling properties that make $200,000 or $300,000 or $400,000, now you do make $400,000, and you are in that higher tax rate because you sold an asset that's worth a lot of money. So it isn't just the super rich who could be impacted by cap gains if people are taking big gains on projects that they've owned for a while, maybe don't make that much income, but have a lot of equity in them. All right, that's all I've got for now. Let me know what you think of this. If I missed anything, if I'm completely wrong on anything, please comment below. We love the likes, so keep liking our videos. We'll have more of these videos, as well as my flips, rentals, and advice videos of my own properties too, and own projects in real estate. And of course, check out investormore.com and Amazon for our 9 books if you want in-depth information on how to invest in real estate. Thanks a lot. We'll be back.